This is now just getting exhausting. And Mr. Goolsbee, I'll save you the time, is saying, oh, well, yeah, the numbers this morning were certainly below our break-even rate, but, the unemployment rate is still good. Goolsbee, have you not studied history at all? Have you not at all made the realization that once the damn unemployment rate goes up, it's too late. You're already in a recession, and then Donald Trump will be right, and Jerome Powell will have proved his name. Mr. Too Late. Goolsbee, I think, is a shill for, at this point, the voice of, well. It was really interesting, mind you, because Goolsbee was one of the first people to say, once the labor market slows, it's really hard to just magically stop it somewhere. I respected that because it's like, yeah, it's true. When the labor market's on this trajectory down, it's really difficult to go, okay, stop. It's really hard to make that happen. Now, we're clearly seeing the labor market slow. We got, in the last labor report at the beginning of August, we had 3 months in a row, mind you, May, June, July, of bad data, an average of about 35,000 jobs. Now we've basically got a fourth month in a row, putting us closer to maybe 35 to 40,000 when you average a 4 month in a row. Usually people don't do, but if you average 4 months in a row, there's somewhere around 38 to 40,000 jobs that you're creating per month. That's very low. And Goolsbee's go, oh, well, the unemployment rate, it's still on the lower side, guys. Why don't we wait and see what the next inflation report says? Goolsbee, have you not seen this damn chart? My goodness, do I really have to break out this damn chart? I broke out this chart in the Alpha report this morning, which I know a lot of you are like, oh, Kevin, it's coupon expiration day. I know, bullish catalyst. Where was the bullish catalyst? Oh, it's actually crazy. I'll give you a little spoiler where the bullish catalyst was today. In our Alpha report today, guaranteed, you can go look it up yourself. In our Alpha report today, Kevin said, boys and girls, it's fully priced in the queues. This suck is going to come down. And it came down. And I said, what was going to do well today? Things like real estate. And boy, we got almost 6% on Rocket Mortgage with a nice little pop right at the start of the day. Really nice, but not just Rocket Mortgage. Look at even Open Door ending up 11.58% and rocketing right at the open. That's where you got most of the gains right after the open. So I'm just saying, if you're not part of the Alpha report yet, you're missing out. That coupon expires later today at midnight. But look at this. This is a chart of the 27 weeks unemployed. You should already know this. When this chart starts skyrocketing, it's too late. You may as well take a giant screenshot of this and paste over it, Mr. Too Late. Why? Because it shows you exactly that if you wait for the quote-unquote 4 horsemen of labor market data to roll over, you will end up being Mr. Too Late. Why? Look, it's very simple. If you wait for 27 weeks unemployed, which is your long-term 6-month unemployed, for example, to skyrocket, look at when it skyrockets. In the 1950s, after the recession, basically, over here in 1970, over here in mid-70s, after the recession is when you get the skyrocket. What about over here in the 80s? Probably about 2/3 of the way through the recession. What about over here? After the recession in the 90s. What about over here in the 2000s? Maybe 2/3 of a way through the recession. What about over here? Recession's basically almost over in 2009. What about over in COVID? After the recession. Usually, when this line starts spiking, so the beginning of it, mind you, we're just at the very beginning of that spike taking off. We're not at the highest levels of this spike yet, right? But we're at the beginning of this spiking up. When you look at the beginning of this spiking up, you tend to be at the beginning portion of a recession. Let's look at it just sort of over time here. Or maybe halfway through a recession, right? So in the 50s, you're about halfway through a recession. Over here in the 70s, you're probably about 80% of the way through a recession. Most of the peaking of the data comes after the recession. The same, by the way, is true of the unemployment rate. This is why Donald Trump says you will end up being too late if you wait. Now, I don't want you to just think about this, because we also got news on Kugler today. So, that's going to be an interesting one as well. Let's just say CNBC is sussing out that maybe Kugler also had a little bit of mortgage sussiness, sussy baka going on. It's not that great. Mortgage rates, by the way, biggest one-day drop in a while here. No wonder real estate's doing so freaking well. That call, though, on the freaking Qs today that we topped out before the market opened was clutch. Just see that in the alpha report every day before the market opens up. But look at it. So if you look at the unemployment rate, if you actually wait for the unemployment rate to do more than this sort of 0.5% point rise that we've done, or maybe even you wait for it to go to 5%, if it goes to 5% or 6%, you're already going to be midway through the recession. You will be too late, guaranteed. The unemployment rate never, ever, not once in the history of recession does the unemployment rate skyrocket before the recession. Not once in the history of recessions. So what student of economics are you, Goolsbee, when you can't tell that once the numbers start turning, it's when you need to wake up? And instead, what do? You go on Bloomberg? Oh, well, we're still waiting for, inflation because, 1 month doesn't make a trend. This isn't 1 month. We are now at 4 months of cracking data, you numbskull. Why do you think the bond market is at the lowest place it's been all year in terms of yields, which actually means the highest price that it's been all year? Why do you think the 10-year is about to break under under 4% back into the threes? Because we're pricing in that this is more than just 1 month of data. We're gonna wait for it to. It's so dumb. Listen, Goolsbee's telling us we don't have to wait for the inflation numbers to make a decision. We got QCEW revisions coming out on the 9th. Look at inflation dates. You've got 9/11. That's 2 days after the QCEW revision. So on the 9th QCEW, take a shot every time I say that. On the 10th, you're going to get PPI. We're expecting 0.3. On CPI month over month, you're also expecting 0.3, okay? Easy. That's going to be on the 11th. 9, 10, 11. We're going to cover all of it. But we want to confirm a soft landing. And so far, the data just, it's making a 4-month trend to no soft landing here. Then, great for real estate companies, great for real estate stocks, great for mortgage rates. Probably not so great for fully priced in technologies. Now, again, I'm not trying to be a bear here. Just is what it is. Now, CNBC also writing a piece about Kugler, saying that the mystery of Federal Reserve Kugler's resignation deepens. Basically, what they say is, hey, she wrote a letter that she was going to leave and she was going to go teach at Georgetown this fall. But Georgetown's website doesn't list her as a teacher. It lists her or a professor. It lists her as someone on the Fed Reserve Board who's on a leave of absence from Georgetown, and she's not teaching any classes this fall. So CNBC dug around her mortgage records. It finds that she has a potential multi-million-dollar property that is listed on mortgage records as owner-occupied, but is potentially on tax records listed as a rental. So some people think people were basically digging into her, and she's like, all right, it's getting too hot in the kitchen. I'm getting the hell out of here. And she basically dipped before her reputation got whacked like cooks. And CNBC is now bringing light to that, though it's not really getting a lot of headlines, because really at this point, I think people are like, who cares, man? Donnie T's about to get the rate cuts he's looking for. I mean, it makes sense. It totally makes sense. Now, we'll see, again, where we go. But we did also some buying this morning in our top 10 stocks for the next 10 years. I sent that alert out in the courses. Make sure you get that lifetime access. And then let's see here, what we talked about today, I just want to be very clear, is possible that it continues next week. We'll see as we get data going into next week. But next week, 9, 10, 11, this trend of the skittishness near highs here would continue. 9, 10, 11, mark your calendar. And then remember, midnight tonight, the expiration of the courses on building your wealth. and the Alpha Report.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.